Hi, everyone. Welcome to another edition of Your Daily Five. My name is Chris Kimble, founder of Kimble Charting Solutions, and today is January 14th, 2021. And let me, I know it's probably happened many times, but it's the first time this year or back on the Daily Five, and wanted to wish everybody a happy new year. I'm just starting my fifth decade in this business, and I kind of wanted to share a couple of things, real quickly. I like this quote from Ben Franklin: if you think in terms of a year, plant a seed. If you, in terms of 10 years, plant a tree, and in terms of 100 years, teach the people. And so I'm going to kind of try to cover maybe all three of these things, looking at a year, 10 years, and maybe planting a seed that could help many of you for a long time to come. And so I look at this picture and I couldn't help but get a little chuckle, but I think about portfolio allocation and how do we balance our lives as far as, investment wise. And as we start out this year, we've seen a lot of commodities and some different things come back or have a pretty good run over the last few months. And so I just kind of wanted to address a few questions today. Is inflation back? Is King Dollar about to collapse? It's been weak lately. Commodities have been up, or do they have a really bright future ahead? Are interest rates heading higher? They have in the short term. If so, are bonds in trouble? So I wanted to talk about, on that first subject, about commodities. And up here on the left is a picture from the album cover ZZ Top and Legs. And the comment underneath: of commodities are to have legs and push higher, the euro must break out. And so I found in the last few decades that some people like horizontal support and resistance lines, and some people like channels. And so I hope to kind of appease both people. So to start off with, this blue shaded line that I have labeled 1 comes into play at about the 120, 1.25 level on the euro. And you can see here in 2008, it was support here, became resistance. And now we're up against that line again. But also, since essentially 2007 in the euro, it's in a downtrend, if you characterize a downtrend by lower highs and lower lows. And so it's facing dual resistance at 0.3. So I wanted to kind of make everybody aware of what the euro does here. If commodity prices are continue to push higher, energy, the likes of gold and silver and that stuff, you're going to want to see the euro finally succeed in a dual breakout at 3. And on the flip side, this chart looks almost the polar opposite, because it pretty much is. This is King Dollar. And so when you look at a horizontal line to start off with, this line 2, the dollar ran into resistance around 90 twice, was support here in 2016, and I added sentiment to it. You can also see that the longer term trend channel, essentially since 2008, the US dollar has created what? Higher lows and higher highs. And so it's testing 2 different support points with very few bulls right now. So I posed the question, is commodities a thing to be in for the longer term? And so now we're talking more about not just planting a seed, we're trying to talk about potentially what the next several years. And so again, what the euro does, and the last 2 charts, the takeaway would be key long-term price points for both King Dollar and the euro. And so this is a chart on top of the dollar that we essentially just looked at, but on the bottom is crude oil. And you can see crude oil, essentially since the dollar bottomed in 08, what has crude oil done? Well, it's created a series of lower highs and lower lows inside channel 2. And so when you look back over the long run, from the 2008 high to the panic low in April of this past year, when crude oil actually went, does anybody remember where it went like negative $40? You see it on the chart here in the futures market. It's now testing the 50% retracement level of that huge long-term 12-year trend as the dollar is testing support. So when we think of that guy with that couch on the back, how we're going to balance portfolios for the short, intermediate, and potentially long-term, we're going to get some really important signals, folks, I think, in the next 100 days or so, or particularly by, let's just call it the 4th of July. So play that's done well as far as the dollar has fallen and the euro has risen has been energy stocks. But when we think back longer term, I believe the stats over the last 5 and 10 years, or especially this past summer, XLE, the energy S&P 500 sector, had the poorest return over the last 5 and 10 years. It's just been dead money for a long time. And so we see that XLE has had a really good run. This is a 40-week rate of change. And you can see that it's still up 32% and was up over 50 in 40 weeks. That was an extreme counter trend move. And so you see this blue shaded area, that this price zone of around the 43 level was support, became resistance, became support, resistance, and resistance. So again, that's why I think we're such at a important inflection point, and why I wanted to start out the year and to try to look at, will these plays continue that have been hot for the last 6 months? And I think we're really going to find some important answers, coming up shortly. One of the things that I did a couple of interviews back in March of this last year. This is the 10-year yield inverted to look like bond prices. And I did these right here as some people wanted me to talk about that this was the largest bearish reversal pattern in yields, or in other words, in bond prices, in 40 years. And that took place at the panic that was taking place at the lows in the stock market in March during the COVID lows. And the polar opposite, the teeter-totter effect worked. Bonds peaked at that time and in reverse. And so we've seen quite a decline in yields. They're testing the 23% retracement level. And so these prior charts that we looked at from the euro to the dollar, they're going to have a big impact on interest rates going forward. And so in full disclosure, we bought TBF, which is the inverse bond fund here. We've now taken profits from that trade, and we're nibbling on a long bond position to see if we can get some type of a bounce. And so it's kind of twofold why we're doing this. This is a long-term chart of TLT. This is where we went and shorted bonds up here, and now we've covered the short, and we're taking a long position in TLT with a tight stop here at 1. And here's a couple of reasons why. You can see this long-term trend. It had this major breakout, and now it's testing old channel resistance as new support. And then when you look at the bottom down here, the 45-week performance, TLT is down 7% in the last 45 weeks. And other times over the last decade, when TLT has lost this much in 40 weeks, it was a lot closer to an important low than it was a high. So this is an entry point, I think, for long bonds. But the caveat would be is I really believe you need to have a very tight stop here, because if the euro would break out, or if King Dollar would fail at support and break down, the trade would be rising rates and to go back to a TBF trade. And one of the things I thought was interesting from Sentiment Trader came out yesterday. It says, as aggressively as traders have been buying call options in stocks, traders on 10-year treasuries are pressing their bets. On Tuesday, more than 800,000 put options were traded for only the 5th time in history. And they said of these other 4 times, which is not a huge sample, but the gain on TLT over the following 6 months was 13%. So another trade that I think is really important here, I believe in Germany. This is EWG. How Germany goes, so goes Europe, and it can really influence stocks in the States, importantly. So another big one here is I want you to watch EWG. And the final chart I want you to really watch is the old man of steel. And so this is steel, the steel ETF, SLX. And if you'll notice that essentially the $50 level has been support or resistance, numerous times over the last 8 years. Every time it's got up here, it's run out of gas. So to me, how SLX or how steel does up here, it's going to answer a lot of these questions, that we've posed. So today, as we wrap back up, is inflation back? Is King Dollar about to collapse? Have commodities, do they have a bright future, and are interest rates heading up or down? I think we covered the charts that are going to be really critical to answer these questions going forward. Thanks again, everybody, for watching. I hope you have a great day and week and 2021. Thank you.